Hey guys, it's Crossroads here. Today I wanted to talk to you about Hims and Hers, ticker symbol Hims. Not specifically the earnings. I will put a link below where we do a breakdown with actually quite a few of us looking at the Hims earnings that we did earlier this week. But what I wanted to talk to you about is a massive number of updates as it relates to the stock and also the company. So many that I was like, you know what, this cannot wait. I need to get this out. So let's take a look at these. Now, the first of these that we see, of course, is the stock itself. It's always good to update that. And we do see that it has gone on quite a ride. Just back here, April 22nd, April 23rd, it was in the mid 20s, and now we are sitting at 51.93. You can see this is a very volatile stock. Previously here, there was a squeeze. And I don't think that we're having a squeeze here, at least not yet, but there is a potential for it. Now, my investment thesis with HIMS is not a squeeze. This is a company that is excelling at a very high level. I don't understand why short interest is where it's at, especially given a couple things that we're going to look at in just a moment. Yet, nevertheless, the reality is this could happen in HIMS again. So let's take a look at some news related to that. So we see here that the short interest came out actually today. Now, note that this is a delayed indicator. This is April 30th, so it lags behind by about 2 weeks. Short interest is actually at 30. It's 30, almost 4% of the float has been shorted. We see that they actually have increased the number of shares that are shorted by almost 3 million. Now, what's really shocking about this is you can see this date, April 30th, 2025. So what happened the day before? The day before, Novo Nordisk announced, along with HIMS, that they were going ahead and doing a partnership where Wegovy was going to be available on the HIMS platform. Now, it's not only just HIMS. It's not exclusive. It's probably no special deals or anything. They announced actually 2 other, I believe, partners at the same time. But this was very significant for HIMS, not because of revenue, not because of margins, simply because it destroyed one of the legs of the bear case, which was that HIMS was going to get sued by Novo Nordisk. That's obviously not happening under that partnership, or at least I should say it's very unlikely to happen, much less so that I was talking to some people that are bearish on HIMS that said, you know what, I'm not shorting this anymore simply because of that. So those that were shorting HIMS had an opportunity to cover, and what did they do? They doubled down. Maybe not quite doubled down, but they added more. And remember, this was at the time the stock was in the low 20s. Now it's in the 50s. I imagine that some have covered simply because of the strength of the earnings. And there's been a lot of change in the macro sentiment, at least since then as well, that's contributed to HIM's rise as far as a stock. Yet, nevertheless, it still shocks me that it's shorted so much. Now, if you're not familiar with HIMS, look at the fundamentals. They don't have debt. They're growing rapidly. 111% year-over-year revenue growth. It's insane, actually, the way that they're growing. They're not going to do that all year. They're not going to do every year. That's a one-time sugar rush from GLP-1 solution, which is going away and is contributing to next quarter being their first quarter, I think, ever since they've been public, that is going to be a sequential decline quarter over quarter. Yet, nevertheless, we've seen their strong guidance. And speaking of guidance, this was probably the most astonishing thing in their earnings, that they guided for $6.5 billion of revenue in 2030 and $1.3 billion in adjusted EBITDA in 2030 as well. So this is 6 years out, and the CAGR on the revenue is about 28%, which is phenomenal growth. Now, some bulls that I was talking to earlier in that link that I'll have below, they thought that this was actually sandbagging, and it could be. I think that they're trying to be conservative here because they said at least they don't want to miss on guidance that they have, even far out. But this also got a lot of reaction and attention from the bears. Bears noted, and they're absolutely right about this, that there's very few consumer discretionary companies that dare to guide out 5 years or 5+ years like HIMS is doing right here. So is this bearish or is it bullish? Well, I'll let you look at the numbers again and decide. If you need a hint, it's pretty bullish. And the reason why I think HIMS is issuing that, I think, is twofold. One is that there was some uncertainty and confusion on the business for those that were kind of newer to HIMS. They were thinking that Hims was all about a weight loss product, and it's certainly not. That is one part of the ecosystem, and it's an important one, but it's certainly not the whole story. Now, the other element, too, which I think is significant with this, is that bears were basically saying, hey, they're just making up these numbers to pump the stock. Well, I think that there is an element of truth to that. I do think that they believe that these numbers are achievable. And you look at their track record, they've never missed revenue guidance ever. They have a history of beating. They missed EPS one time by just a smidge before I was an investor. I can't remember what happened there, but there was some reason for it. This, though, basically is just them saying that they're very confident in their business and also that they are defending and willing to defend their stock. Certainly, they want their stock to go up, not just long term, but also near term as well. Why would they want to do that? Well, a part of that is from this announcement that actually came out this week about a senior convertible note offering. This is from the 8K that was actually reissued today. It was an update from the initial senior convertible note. Now, what is a senior convertible note? It's when a company says, rather than take on debt, which right now is a bit expensive just because rates are high. So you've seen a lot of companies over the last 2.5 years go to this route. But the other part of this is they say, rather than dilute immediately at the current level we're at, especially if they think that their stock price is relatively depressed compared to where it's going in the future, they say, let's do it on a forward basis. Now, the way that these usually work is sometimes that these are short-term deals, 1 or 2 years out. Usually it's multiple years, 3, 4, 5, 6 years out. These go until 2030. And there's usually a little bit of interest on it. Now, it's not a lot of interest typically, but it can be like 1.5%, 2.5% interest. Sometimes, if it's a very weak company that there's a lot of doubts on, like Peloton had last year, they have 5.5% interest on these, in addition to granting future shares at a certain amount of valuation. Now, of course, if the stock never gets there, that's the risk for the investor. Then they get absolutely nothing unless there's material changes to the company. That's a whole complexity I'm not going to get into here. Now, Hims does take some of this revenue, and they do buy what's called capped calls. In essence, these are like buying call options simply to protect themselves should the share price just explode and go parabolic, which as investors, we certainly hope that's the case. But nevertheless, a lot of this revenue is very interesting. So there's two interesting parts about this. One is you'll note 0.00% interest. Now that is irregular. I would go as far as saying it's rare. It's not super rare. It does happen. Usually that's when there's a lot of demand and there's a lot of faith in the direction of a company that they're like, okay, there's no real risk that we're not going to get the certain share price that we're looking at. And as a result, the 0% is what is awarded. Now, the other part is initially they announced that it's going to be a $450 million raise. And instead, they raised a lot more just because it was oversubscribed, showcasing the demand of a tune of $870 million. It does dilute, as long as they're above 70 and some change in 2030. It does dilute the company by about 6%, a little bit less than 6% overall. This is a massive amount of cash. Now, when you see that, the first thing that you should do as an investor is say, wait a minute, why are they diluting me? Well, know that this isn't immediate dilution, but it is dilution. Are they doing it because they are in debt and they're trying to pay off debt? Well, no. Hims does not have debt. Are they doing it because they have a balance sheet that is shrinking and they're not profitable and they are afraid of bankruptcy? No, the balance sheet is actually very healthy. They continue to buy back shares, although they did not this quarter. They continue to do a lot of things that show a lot of great health. You look at EPS, you look at revenue, it's growing rapidly. Will not, by the way, for revenue in quarter 2 on a quarter-over-quarter basis, but you know the guidance for the rest of the year. It's very strong, very bullish, and bears are in disbelief. And I even was like, maybe it's a little optimistic. I'm glad they did not raise it beyond where it was. It was already set quite high, and they don't want to miss that. So in essence, there are a lot of people, a lot of investors, a lot of institutions as well that look at Hims and say, oh, man, give us a piece of that action, even at 0%, even in the conditions that they have, which $70 is a lot higher than the current price. And so that's actually really exciting. Now, what's really cool is you can see in this 8K as well, you see a mention to one of the two new appointments that we're going to talk to in just a second. So they say Hims and Hers intends to use the proceeds from the offering for general corporate purposes. And usually, by the way, when companies do this, they say what they're using it for. So this is to help build and grow the company, including accelerated global expansion. They did talk about international expansion. Technically, Hims is in the UK, but it's a very, very small foothold. And eventually, they will expand internationally through both organic growth and strategic acquisitions. That's another piece of this as well. Now, bears, I don't know, like on this company, they're just irrational for the most part. There are real bear case arguments. I will put a link below where I detail 4 bear case arguments and also bull case arguments as well. This is before earnings, but not really anything has changed. But nevertheless, bears look at this and say, oh, acquisitions. That's because they're desperate for new revenue because their main source is like drying up and they've hit that TAM. I mean, look previously at Hims. They've done acquisitions all the way through their history. Look what the revenue has done. Look at even those core products that they had previously. They've continued to grow as well. It's just a silly, silly argument. So anyway, Hims and Hers has no definitive agreements for material acquisitions at this time. So this is just for the future. But the funds will also support the technology team led by newly appointed CTO Mo Elishnawi. Pardon, I'm going to butcher that name a bunch, to expand the company's data pipeline, develop AI tools, and advance personalized treatments to enhance the consumer healthcare experience. In addition, a portion of the net proceeds will be used to fund the cost of entering into a capped call transactions. That's what I mentioned below. Those essentially covered calls for the company that's protecting them in case their stock price goes to like 5,000. You know, it's not doing that, but I'm just saying hypothetically. So in essence, this is a cash raise while the stock price is up. You know, it's one of the reasons why they've been defending it, so that they can use this to grow internationally, to expand and grow the ecosystem through organic growth and acquisitions, and also to give a whole bunch of money there to the new CTO, Mo Elishnawi. So let's take a look at him because it gives us an idea of the direction that Hims is wanting to go. So this was news on the same day. Hims and Hers appoints AI expert and former president and CTO at Cruise as chief technology officer. And so that's the new CTO. They've been looking for this for a long, long time, wanting to make sure that they get the right guy. Now, actually, let me go into this. Why would they hire a guy that's focused on AI and focused on automation, focused on this kind of technology, rather than somebody that's in pharma? Well, the CEO has talked about Hims for quite a bit as being a data play and also a technology play, that this is a technology company, not just a telehealth company. And they're talking about building this whole ecosystem. We'll look at that in just a second. But this guy basically led Cruise to a lot of success. It may not be the leader in its field, but if you look at his resume on LinkedIn, he has done a lot. He holds a lot of patents. He knows his space very, very well. You can look at his comments that he's saying right here. We are standing at the edge of a healthcare revolution, and Hims and Hers is uniquely positioned to lead it. By harnessing the transformative power of AI and data, we can reimagine how care is delivered, making it more intelligent, more personal, and radically more accessible. That's frankly their moat. That's their advantage. They need to continue to develop it and deepen it, and this is the guy to do it. And so I'm excited to actually see what he comes and builds and how he does that. Now, he was not the only CTO that was hired and brought on over the last 2 weeks. The other fellow is right here. It's Nader Kabani, and I might be mispronouncing his name as well, but he's the chief operating officer, and he actually comes with a wealth of AI. You can see it right here, AI-based robotics and automation as well. So right now he is involved in Symbiotic, which is certainly that. It's a fulfillment company that's there on the back end that helps with the robotics, AI, automation, and that sort of thing. But he's probably best known for his time at Amazon, almost 20 years. One of those things that he did there was working on Amazon Pharmacy quite a bit, including launching their pill pack. So he is a guy that you get kind of the best of both worlds. You get AI, automation, robotics experience, and also pharma experience. He's actually very big in the industry. So I actually think that both of these hires are really, really compelling for HIMS. And they've had a lot of success. They are going to be building out this ecosystem. They have the money now to do that as well. And so essentially, this is what they're building is not just a company that's there to be able to deliver Viagra at cheap cost to people. They have a lot of products that they've been launching, and they talk about this as an ecosystem, specifically an ecosystem that provides subscribers value beyond medication is proving to be vital across our specialties. And so the different aspects of their business are, of course, diagnostics. MedMatch is something that was an acquisition by Hims and Hers. It is proprietary, and I think it's a very good fit for what they're trying to do in their ecosystem, but they need to continue to develop and build that out. And actually, at some point in the future, they may be able to monetize this for other clients as well, other businesses specifically. Services and tools is something that you can look at there. Follow up care and support is something that they really do well. A lot of high touch. And you can see their physical investments in their facilities over the years. Some of these are newer than others, but we can see kind of the timeline here that they acquired a peptide facility. That's one of their most recent acquisitions that's based in California. Peptides are a very exciting place. There is some additional regulatory scrutiny from that, so we'll have to see how HIMS develops that business. But these are actually fairly small acquisitions, or at least that one was. 503B facility, which is there for the wide scale compounding. It's basically how they were able to compound as much as they did with GLP-1s. They will still use this even after GLP-1s, but really I think that was acquired specifically for that because they saw a great opportunity to do that, and it probably paid for itself already. 503A compounding facility, that's for the when there needs to be personalization that's done there just because of some medical necessity. Another one in Ohio as well. Some expansion to some of these facilities. And of course, the testing kit that you can send that they just acquired in 2025. That's a very small acquisition, very small company. But that is going to be something that they'll definitely put in their ecosystem. And they continue to build out their whole ecosystem. Now, one of the things too that HIMS is doing is they're showing that they have a lot of growth levers here. So all of these things are very important to have for HIMS. So they just don't go the way of like a Teladoc or just be another Roman. Fine companies, although not very good investments, at least on Teladoc's side. Personalization is something they need to continue to deepen, and they will do that through a lot of investment on the back end. Expansion into new emotionally resonant specialties. And so you can see testosterone right there. Follow-up care being elevated, global expansion of their platform. So that's an international launch and the strategic partnership. So essentially, all this builds into a long-term vision with 5 key areas. You can see them all laid out here, but they have to expand and build upon what already exists as far as their capabilities. This was, again, an acquisition that they need to develop. They've had more and more weight loss offerings, and they will continue to do that. And it won't just be through partnership, although that's part of it. They need to continue to have more and more personalization solutions and more specialty launches. That's their peptides right there, as well as building out their tech infrastructure. You can see right there, onboarding the CTO was a part of that. And so that's a direction that the company is headed. All of these moves over the last week and a half, they integrate very well into that long-term vision. And I think that's why HIMS was so comfortable giving us that outlook for 2030. Bears will continue to disbelieve. Bulls will say, hey, this thing is going to the moon. Right now, things are going very well for us bulls. Keep in mind, this is a very volatile stock. There are going to be times when bearish news comes out and the stock price does fall. There will be times when it goes the other direction, but this is one of those good times. And so this was an absolutely great week to be a bull. Anyway, let me know what you think in the comments. Was there some news on HIMS that you thought I should have highlighted more? Am I looking at these in the wrong way and some of this news is actually bearish? How are you handling your HIMS position? It's risen a lot. Are you taking some profits? Are you adding to it? Are you selling covered calls and getting those called away? There's no wrong answer. It's called personal investing for a reason. But until next time, thank you for watching, commenting, and subscribing, and happy investing.